Hi investors. Today we're going to talk about the recent Supreme Court ruling on President Trump's emergency tariffs. Last Friday, U.S. Supreme Court ruled that Trump's emergency tariffs were illegal. The Supreme Court clearly said that it's the Congress who has the authority to impose tariffs, not President Trump. This means that Trump's Liberation Day tariffs are illegal. On April 2nd, 2025, President Trump announced that he will impose reciprocal tariffs on everyone, including Indonesia. His reciprocal tariffs were based on the 1977 International Emergency Economic Powers Act, which allows the president to impose wide-ranging tariffs in response to a national emergency. But the problem is, it's not clear whether drugs or a trade deficit can be considered national emergency. Now, Trump is in a bad position. The U.S. customs duties and tariff revenue soared since the Liberation Day. The U.S. government might have to pay refunds up to $175 billion after the Supreme Court ruling. And there are many companies that are lined up to file the tariff refunds. Yes, they will be concerned about the retaliation from the U.S. government. However, if they don't file the refund after the Supreme Court's ruling, the management team themselves could be filed for breach of duty by the shareholders. Unfortunately, this comes at a very bad timing. U.S. debt is at $38.5 trillion, the equivalent of China, India, Germany, and the UK GDP combined. If U.S. government were to refund the tariff revenue, it will have to issue more government bonds, inflating the debt situation further. More supply will mean lower prices, and lower prices mean higher yields, making debt repayment more difficult. The dollar index was already in a downward trajectory, driven by Fed's rate cut initiative. With the possibility of the U.S. government issuing more debt to refund the tariffs, we feel more confident that the value of the dollar is going to continue to weaken. Weakening dollar is good news for commodities. On the right-hand chart, you can clearly see that the dollar index and commodity index are negatively correlated. If the dollar were to continue its weakness, we see increasing chances of commodities rising. It might be a bit early to judge, but the weakness in USD and rising commodity prices will prompt investors to take interest in emerging markets over developed markets. Indeed, MSCI Emerging Market is outperforming MSCI World or Developed Markets by 9.1 percentage points. High-performing markets include Mexico, Brazil, Taiwan, Thailand, and Korea. Unfortunately, Indonesia is the only country that is in the negative territory due to issues with MSCI and Moody's. Also, observing top-performing ETFs year-to-date, we noticed that most of the top-performing ETFs are related to commodities. So what sectors should investors take interest? First is commodities, as we now think commodities are likely to benefit from low dollar. Focus on sectors that have supply and demand mismatch. We like copper, aluminum, and tin. Also, we like oil as long as US initiates attack on Iran. We also like infrastructure, as rising commodity prices are likely to stoke inflation. As a quick reminder, Indonesia's inflation came in at 3.55% as of February 2026, a level not seen since May of 2023. Rising inflation should improve the revenue of infra players as they pass on the cost to customers. Consumer staples are also on our watch list. Consumers with strong brand power will be able to pass higher costs to consumers as well. Lastly, financials are also on our watch list as rising yields will improve their net interest margins. However, we have to watch their asset quality very carefully. The moral of the story goes like this. U.S. Supreme Court ruled against President Trump. It's now official that Trump's tariffs since Liberation Day are illegal. The U.S. government is now faced with risks of paying back the $175 billion tariff revenue to companies who demand refund. Unfortunately, it's a bad timing. US is already suffering from excessive debt and rates are not low. This means that US government will have to issue more government bonds to service their debt. With all being said, we feel more confident that USD will weaken and commodity prices will rise. Lastly, it's a bit early to judge, but money is shifting from developed markets to emerging markets. We recommend investors to buy Indonesia. I also recommend you to reach out to Samuel representative. If you've enjoyed the contents, please like and subscribe. Thank you.